Actually, our bookings value growth, which is the measure of operational sales during the quarter, actually registered about a 90% increase year on year during the quarter. In terms of volume sold, we actually saw a more than 100% or a doubling of growth during the quarter. So we're actually very happy with the momentum during the quarter, which again was strong uptick both on year-on-year numbers as well as on the quarter-on-quarter numbers. The accounting revenue, which you might be referring to, is linked to projects getting completed and therefore entering revenue recognition, and is inherently going to be a lumpy number in real estate. We didn't have any major projects getting their occupation certificate this number, so that's why revenues weren't growing. But certainly from a booking value perspective, which is the operating metric that we track, there was quite robust growth. The highlights that led to that growth were that we actually had projects for the first time that we launched in 6 new cities in the quarter. So those were Bombay, Delhi, Bangalore, Pune, Kolkata and Ahmedabad. This was our first ever project launch actually in the Delhi market, which we were quite excited about. That project's done very well. We also saw a very strong response to the launch we had in our Pune project, which was the first of the 6 projects that we added last year in a large portfolio transaction we had done. So we're quite excited to see that project get off to a good start. I think the other highlight that perhaps doesn't get fully visible in the results as published was on the business development side, where while we didn't announce new deals during the quarter, the visibility in terms of the number of term sheets we've signed and the active deal discussions at an advanced stage are probably the best they've ever been. So we're quite excited about that as well.
Firstly, during the simulcast, you did speak about the slowdown, the economic slowdown that we are facing across industries. I want to understand if there has been any kind of impact on real estate or your business of that particular slowdown.
Right. I think there's no question that the overall Indian economy is, of course, has seen a slowdown in the last quarter, and certainly that has also impacted the real estate sector. In many ways, one could argue that the real estate sector has been driving this slowdown, given that it's actually been witnessing a decline really for 5 or 6 years now. But I don't think that has really impacted Godrej Properties. In fact, that is creating a lot of opportunity for the company because customers are still quite excited to buy properties from leading developers across various cities, developers who they can trust will deliver the homes, who are not under any kind of financial pressure. So what you'll see is not just us, but all leading developers are seeing increases in market shares over the last couple of years, and I think that trend has continued during the quarter.
You spoke about all these new launches that you've done, if I'm not wrong, about 9 in the first half of the year so far. By when do you see a revenue addition of these projects? Secondly, any new projects for the coming quarter that you can talk to us about?
Yeah, so revenues recognition with the accounting standard change that happened about 12 months ago in the sector has now actually got very back-ended, because what happens is you add a project from a business development perspective, you then go through the design and regulatory approval stage. Then typically we would launch the project as soon as we receive all the regulatory approvals before we even start construction. And then we have to go through the full construction timeline, and only upon getting the occupation certificate for the project do we recognize any revenues in that project. So projects that we launched in the first half of this financial year realistically will hit revenue recognition 3 years from now.
Okay. And about new launches?
Yes, we have a fairly robust launch calendar plan for the year. I think it's something like 14 or 15 new launches we hope to get done in the rest of the year. In fairness, most of these are linked to receipt of regulatory approvals, so I'm sure a few of these will slip into the next financial year. But I think both on the business development pipeline side and on the sales launch side, we're quite excited about how the pipeline is looking.
You said no new deals signed, but quite a few term sheets have been signed this quarter. Could you give us a little bit on understanding on the nature of these deals and any timeline if you could share?
Well, the timelines are inherently somewhat unpredictable, and a lot of these deals tend to actually not even finally fructify. But we have, almost 20 term sheets signed over the last 4 or 5 months. So even assuming a lot of them fall through, we do expect to see strong momentum in business development in the next 6 months.
What is it that you're seeing in terms of trends as far as the commercial sector and residential sector is concerned? And if you could also throw some light on the kind of price trends that you're currently witnessing.
I think the residential sector has clearly been on a down cycle now, really since about 2013. What we're seeing now is relatively stable, both volumes and prices. So I think we're not seeing any continued decline, at least that is noticeable. We are also seeing a lot of consolidation and opportunities for market share gains, as I mentioned. Pricing has also been broadly flattish in most markets, but in some markets like NCR, there has actually been a sharp price reduction from peak levels. On the commercial side, the commercial recovery actually started from the global financial crisis much later than the residential recovery did. So the commercial real estate sector recovery started in about 2015. That continues to be doing very well. And I think both leasing volumes and leasing rates have seen a pretty steady increase. So I think the commercial sector has been doing quite well.
Just lastly, what is your outlook for the second half of the year? Do you finally see some kind of revival happening? Did festive season, if it went well, do you think it anyway contributing to this?
I think it's going to take a little bit longer for the residential sector to recover. I think a lot of the liquidity issues that are present in the sector, a lot of developers struggling to access capital, a lot of the NBFCs having turned extremely conservative because of their own liquidity pressures. I do think all of this is going to take a little bit more time to resolve, and I don't expect a very robust second half for the sector as a whole. Certainly, I think for individual players, the opportunity could be different.